Let's get right to it. When you first start exploring the world of investing, you'll quickly notice there's a lot of jargon thrown around. Two of the most common terms you'll hear are stock and share. At first glance, they might seem interchangeable, but there are important distinctions, and understanding them can make a real difference in your investing journey. If you're new to investing, you'll hear stock and share all the time, and it's easy to get confused. You might see these words in news headlines on your favorite finance app, or even in conversations with friends who are already investing. That confusion can make you hesitate, and hesitation can cost you real money over time. When you're unsure about the basics, you might delay making decisions, miss out on opportunities, or even make mistakes that could have been avoided. So let's clear it up. Understanding the difference is one of the first steps to building your financial confidence. When you know what these terms mean, you'll feel more empowered to take action and less likely to be overwhelmed by all the information out there. It's like learning the rules before you play the game. Knowing the lingo helps you make smarter moves. Just as you wouldn't jump into a board game without understanding how to win, you shouldn't start investing without grasping the basics. When you're clear on the basics, you'll read financial news and check your investments with confidence. You'll be able to follow market trends, understand what's happening with your portfolio, and make decisions that align with your goals. The world of finance can seem intimidating, but it's not as complicated as it looks. With a little effort, you can break down even the most complex topics into simple, manageable pieces. By learning the difference between a stock and a share, you're taking your first real step toward understanding the market. This knowledge is the foundation for making informed choices, whether you're investing for the first time or looking to grow your wealth over the long term. So, let's break it down together. By the end of this chapter, you'll have a clear understanding of these key terms, and you'll be ready to take your next step as a confident investor. Let's break down a concept that can seem confusing at first, but is actually pretty straightforward once you see the big picture. When people talk about stock, they're referring to the overall idea of owning a part of a company. Think of stock as the umbrella term. It's the big picture concept that means you have a stake in a business, no matter how large or small. For example, when you say you own stock in Apple, you're saying you own a piece of Apple itself. You're a part owner, even if it's just a tiny fraction. This ownership gives you certain rights, like voting on company matters and potentially earning dividends if the company pays them out. But here's where it gets more specific. A share is the individual unit of that ownership. Each share represents a slice of the company, and the more shares you own, the bigger your piece of the pie. Imagine a company as a giant pizza. The whole pizza is the stock, and each slice is a share. If you own a slice, you own a part of the pizza. The more slices you have, the more pizza you get to eat. Companies divide their stock into millions, sometimes even billions of shares. This makes it possible for many people to own a piece of the company, no matter how big or small their investment. When you invest, you're not buying the whole company, you're buying shares. These are the actual units you purchase and sell on the stock market, and they're what show up in your investment account. So remember, stock is the overall concept of ownership, while shares are the countable individual pieces that make up that ownership. It's like the difference between owning a cake and owning a slice of that cake. You don't buy one stock of Google or any other company. You buy a certain number of shares depending on how much you want to invest and what the share price is at the time. Each share has its own price, which can go up or down based on how the company is performing and what investors think it's worth. That's the number you see in your brokerage account when you check your investments. Understanding the difference between stock and shares is a fundamental step in learning how to talk and think like an investor. It helps you make smarter decisions and communicate more clearly about your investments. In conversation, people often mix up stock and share, but using them correctly shows you know your stuff. Use stock when you're speaking generally. I invest in the stock market. Use shares when you're being specific. I own 10 shares of Apple. Shares are always tied to a number. Your brokerage account lists the companies you own and the number of shares for each. The total value of your shares is your stock portfolio. So, remember, stock is general, shares are specific. Getting this right instantly boosts your financial vocabulary. Here's a twist. The terms change depending on where you are. In the US, stock is the general term and share is the specific unit. Americans say, I own stock in Tesla, and I bought 20 shares. In the UK, shares is used for both the general concept and the specific unit. British investors say, I'm investing in shares, and refer to the shares market. In the UK, stock can even mean government bonds, not company ownership. So if you're reading international financial news, pay attention to these differences. Knowing this can save you from costly misunderstandings. So, what do you actually get when you own shares in a company? It might seem like just a piece of paper or a digital record, but it represents much more than that. Owning shares means you have a real, tangible stake in a business, no matter how big or small your investment is. First, if the share price goes up, you can sell your shares for a profit. This is called a capital gain. Many investors buy shares hoping the company will grow and become more valuable over time, which can increase the price of each share you own. Some companies also pay dividends, which are regular payments made to shareholders out of the company's profits. Dividends are a way for companies to share their success directly with the people who own a piece of the business. For example, if you own 100 shares and the dividend is $1 per share, you'd receive $100 in cash. These payments can be a steady source of income, especially for long-term investors who hold on to their shares. However, not all companies pay dividends. Many fast-growing companies choose to reinvest their profits back into the business to fund new projects, research, or expansion, aiming to increase the company's value in the future. Another important benefit is voting rights. As a shareholder, you often get to vote on major company decisions, such as mergers, big changes in strategy, or who sits on the board of directors. Even if you only own a small number of shares, you still have a voice in these decisions. Your vote helps shape the direction of the company, including choosing the leadership team that will guide its future. Most importantly, owning shares means you're a part owner of a real business. You share in its successes and sometimes its challenges. This connection can make investing more meaningful and personal. Being a shareholder can encourage you to stay informed, pay attention to company news, and think carefully about your investment choices. It's not just about numbers on a screen, it's about being involved in the business world. Each share you own is a real stake in a company's future, giving you both financial opportunities and a sense of ownership in something bigger than yourself. To sum up, stock is the general term for company ownership. Shares are the specific units you buy. You invest in the stock market to buy shares of a company's stock. In the US, use stock for the big picture and shares for the details. In the UK, shares is used for both. Mastering this simple distinction builds your confidence and helps you talk like a pro. The more you understand the language, the less intimidating investing becomes. Confidence leads to action, and action is how you build wealth. Now you know the difference, and you can explain it to anyone. Don't let jargon trip you up. Own your knowledge and keep learning. Start building your portfolio, one share at a time.